Yeah, so I think they're going to try to introduce a central bank digital currency, right? But the question is, how is that much different when they can still print it at whim, right? If there's no
Mm.
stated run like on Bitcoin, it's still something that they can print unlimited amounts of in the future. And again, that's the big question: is do they say, okay, well, for every dollar you're going to get, half of a a digital currency coin that, and therefore reducing the monetary supply? I'm not sure how that's going to work. But again, it would problematically, I just have an issue with that. You can't have an entity kind of controlling the flow of money. That shouldn't be the way it is. Again, that's how that's how the greatest empires in the world have collapsed. You look at this type of thing; it's extending throughout your environment by outside of your borders. Whether it's extending yourself too far, we saw that with Napoleon. We've seen that so many other times, and it's also just unlimited printing of resources that eventually devolves into a economic collapse.
Cryptocurrency markets experienced a relatively calm month in February as the total market capitalization gained 4% in the period. However, the fear of regulatory pressure appears to be having an impact on volatility in March. Bulls will undoubtedly miss the technical pattern that has been guiding the total crypto market capitalization upward for the past 48 days. Unfortunately, not all trends last forever, and the 6.3% price correction on March 2nd was enough to break below the ascending channel support level. Hello and welcome to Crypto Street. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
No, I've never been in that camp. I think it's always the popular thing to kind of smooth it over and make everyone think everything's going to be fine. It's almost like the parents with the children, right? You never want to tell your children the world's ending. You say, "Oh, it'll be okay." But I think deep down they know what's coming. Maybe they somehow are delusional in that they can kind of figure out a way to get out of this. But I mean, you see the numbers. I mean, yes, jobs numbers are still strong, but everything else is crumbling. And again, the economy lives and dies with the housing market, right? Think about how many jobs go into housing, whether it's mortgages and all that, or it's the carpenters, the plumbers, the electricians. And so we're in for a deep shock here. And again, you're seeing home prices starting to crumble. It's very, initially it's very reminiscent of what we saw in late 2007 going into 2008. I don't know if we'll still see the same sort of collapse, but I think that the reverberations will take down the economy into a recession. Yeah, I mean, if it's that serious, then we're in a heap of trouble. I mean, one of the positive things about 2007, 2008, 2009 is that inflation stayed low, right? So you enabled the Fed to come in with this printing of money policy. That's not the case anymore. And that's the part that should really freak people out, is that if they can't print us out of this situation because inflation's high, then we're going to be in a recession that could last. I mean, we could be talking a 5-10 year recession in this economy. Yeah, so looking at the gold chart, I still remain as a avid bull. I did say to people when we were up in this range that we had run a little too far too fast and to wait for this level here. Again, notice this beautiful trend line right here. We broke below it, retraced into it, fell down, retraced into it, hammered, finally broke out. And then when you get the breakout, there's this kind of relief of just short covering and buying that pushed it up. You never want to buy at those highs. Generally, you'll get a better opportunity. And you can see that what happened. We came right back to that trend line right there at around 1805, and that's been the buying opportunity. So I think now is the time to be in gold again. I think the next leg is going to take out this high pivot, and we will go revisit this double top around 2075 or so.
The ascending channel initiated in mid-January saw its $1.025 trillion market cap floor ruptured after Silvergate Bank, a major player in crypto on and off-ramping, saw its stock plunge by 57.7% at the New York Stock Exchange on March 2nd. Silvergate announced additional losses and suboptimal capitalization, potentially triggering a bank run that could lead to the situation spiraling out of control. Silvergate provides financial infrastructure services to some of the world's largest cryptocurrency exchanges, institutional investors, and mining companies. Consequently, clients were incentivized to seek alternative solutions or sell their positions to reduce exposure in the crypto sector.
Yeah, and I think this time, I mean, it's very normal for double tops to occur where you pull back, right? This was a major pivot high. We retested, sellers came in.
Right.
It's the probabilities are now shifting that on the third or the fourth hit, you likely will break to the upside. So I think at minimum by year end, we're retesting that level. And I really think that there's a good chance that we should be above that level. And then you have to start talking about charts going back to the 1970s and 1980s about the parabolic move that we saw in gold when it finally had this breakout after about 2 to 3 years of consolidation, where gold went about 9x. And again, I don't think gold's going to do that, especially with Bitcoin on the fold now. But I do think, is it possible for a 3x on gold over the next 5 years? I do think that's possible. No, I think there's definitely always a chance, right? It depends on how bad things get. Right. How much does the Fed eventually get pushed to come back and print? And right, so the idea here is initially in the recession period, when we hit a recession, assuming inflation's still above 2%, the Fed is going to say, okay, a minor recession. Right now, it's no recession. It's a soft landing, just like it was transitory inflation, right? So what you'll see is the goalpost moving with the Fed, and it'll be like, okay, well, now we're moving to a small recession, but don't worry, it'll be 6 months to a year. And then as it gets worse and worse, that's where you have to say, how bad does it have to get when inflation is above 2% before they come in and print anyways, right? So there's always going to be a breaking point. I mean, if you told me there was going to be 20% unemployment and inflation was at 3%, well, absolutely the Fed's going to print with 20% unemployment. So it's just about where the numbers are, how bad it gets before they print. But the problem is, if they start printing with 3% inflation, you're going right back to 10% inflation in no time at all, and that's the problem. Yeah, so I think he is stuck, but at the same time, I think they're going to really hold back on pivoting, because he's mentioned that he saw what happened to Volcker when he pivoted too quickly and started to cut. So I do think they hold back for at least the next 12 months. And even when we're in a recession, they are not really dropping interest rates precipitously. Maybe a tiny bit, throw the market a bone, but nothing dramatic. I think that's going to be the bigger problem, is that it's going to then start to cause a breakdown in the system. We talked about the bond market already having problems. You start to see breakdowns in the financial system itself, and then things get out of control very, very quickly, especially when we've had this artificially inflated economy and monetary system now, basically going back to the 2009 lows of the last big recession.
On March 2nd, the bankrupt cryptocurrency exchange FTX revealed a massive shortfall in its digital asset and fiat currency holdings, contrary to the previous estimate that $5 billion could be recovered in cash and liquid crypto positions. On February 28, former FTX engineering director Nishad Singh pleaded guilty to charges of wire fraud along with wire and commodities fraud conspiracy. With billions worth of customer funds missing from the exchange and its United States-based arm, FTX US, there is less than $700 million in liquid assets. In total, FTX recorded an $8.6 billion deficit across all wallets and accounts, while FTX US recorded a deficit of $116 million.
Yeah, and I think the thing is that people have to be aware of is we're so kind of, centralized in our thought process that the U.S. markets are the place to be. I really believe that was true for the last 15 years, maybe even the last 20 years. But I do think that there's going to be this shift where, as the Fed is unable to kind of, print us out of these issues, people are going to start looking for other areas to invest. And I think China is one of those places that money's going to go. Now, obviously, you have other issues going on there people have to be careful of. But I also think, I've been a big proponent of Brazil and some of the South American countries. They're going to start to emerge as a stronger economy, especially the ones that have big resources in the metals, right? If you're a country that are mining these metals, you're going to do very, very well. And there's going to be a big boom going on. So for me, I'm keeping it relatively short term unless it's in the metals, right? So I have gold holdings, I have silver holdings, I have the miners right now. Those are some of the investments that I have currently. So I think those are the places to be. I think eventually Bitcoin is, but not until we get regulatory clarity there and kind of a final flush out on the crypto space. Other than that, I would just play it shorter term with defensive plays. Like one of the favorite trades for me right now is AMGN. This one has sold off as the markets have rallied off of these lows. You can actually mark the top on Amgen with the market bottoming. And so it's almost like an inverse play to the markets. It pays a good dividend. You have a lot of these positive things. So I think you start to shift again from the technology stocks that have been so hot lately to more of the defensive names. And again, those should be the leaders for the next 3 to 6 months. Think about the amount of interest. What a waste. What a waste of resources, of money. I think that's the first thing that any American, anyone in the world has to think about. And I think we have to figure out a way through this, and not by printing more money and diluting. But the question is, how do we do it without doing that, right? I mean, it's almost like we're getting boxed in a corner now where there's not really any good option of getting out. I mean, yeah, you could raise taxes on people, but that'll kill the economy. You could print money, but then that causes inflation. I mean, so again, to be honest, it's one of those things where I don't know the answer here. But it's a situation that has been made by our government as well as the Federal Reserve. And they made it. They need to unmake it. They need to figure it out and come up with some solution. But honestly, I do not know the easy outcome. Yeah, I actually am in the camp that that's the goal of the Chinese. And again, there's going to be some back and forth here. There's going to be some battles. We obviously see that constantly now, whether it's balloons in the air or other things going on. But there's there's no doubt that the Chinese government is trying to take what they've learned from the U.S. and then try to do it better and take that digital reserve currency that they've created, the digital yuan, and make it the reserve currency of the world. And again, what they're also trying to do, by the way, China's also trying to get their middle class to really evolve into spending money, much like the U.S. middle class has. And that's their goal. They don't want to be reliant on other countries for, trade. And like they are at this point where, the U.S. slaps tariffs on, or the U.S. decides to do sanctions. They want to become independent and kind of a body where they deal with their own future. They come up with their own future. So I think that's going to be the key, but I do think that China's absolutely on that path, and I honestly expect that to be the case. It won't happen quickly. Reserve currencies don't flip overnight, but I think over the next 10 years, you'll probably do see that.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.